Hello, Junior League of Phoenix. My name is Jill Kipnes. I'm very excited to be taking part in the Invest in Yourself spring training. I am going to be talking with you today about tax preparation focused on expenses and tax credits. I've been a member of the Junior League of Phoenix for about 25 years, primarily focusing on the fundraising and membership sides. I work full-time as a paralegal, and I work as a tax preparer for H&R Block. I've been there 25 years just during the tax season. I've been an enrolled agent since 2015. An enrolled agent is a special designation from the IRS, and it allows me to represent my clients in front of the IRS. As a disclaimer, I encourage you to check with your tax professional about all the things that we talk about today and make sure that you can claim the expenses that we're talking about and how they will affect your tax return. First, I'm going to go over a few definitions. I'm not going to use a lot of lingo. I'm not going to use a lot of calculations. I'm not going to throw up any forms or anything like that. I'm going to keep this on a really even level so you fully understand and can take away a lot of information from today's presentation. However, there are some words I'm going to use, so I do need to go through those with you. An adjustment is when we take an adjustment to income, student loan interest, contribution to traditional IRA, certain HSA contributions. We subtract those from your income and we get your adjusted gross income. Adjusted gross income is really important. It's a great starting point for a lot of other things that you can claim later on, certain other expenses, certain credits for the tax law change that just passed, the one that put $1,400 into some of our bank accounts. That number was the number that they looked at was the adjusted gross income to figure out if you were eligible and how much you would be eligible for. Deductions. Two kinds of deductions, standard deduction, itemized deductions. We're going to go into a little bit more in depth here in a second, but we take your adjusted gross income, we subtract your deductions, and that's where we get your taxable income, and then we figure your tax from there. Both of those are considered above the line. Then there's the credit. Credit is below the line. Take your tax, we subtract your credits, we then subtract your withholding, and that's where we get your refund or your balance due. So credits are dollar for dollar against your tax. Two other words I'm going to be using are pre-tax dollars and post-tax dollars. Pre-tax dollars is money that comes out of your check before they figure your tax. 401k contributions are pre-tax dollars. Health insurance premiums, pre-tax dollars. HSA contributions are typically pre-tax dollars. Then there are post-tax dollars. That is your paycheck. Everybody gets a deduction. We either itemize your deductions or we take the standard deduction. When we itemize your deductions, we take mortgage interest, real estate taxes, other taxes you pay, charitable contributions, and high medical expenses. We add all those up together. If it's higher than your standard deduction, which is based on your filing status, we take the higher number. We itemize your deductions. If it's lower than the standard deduction, we take the standard deduction. We always take what's best for you. However, because of the tax law change in 2017, standard deduction was increased. It basically doubled. So fewer people are itemizing their deductions now because of the higher standard deduction. However, in Arizona, you can possibly itemize your deductions even if you're taking the standard deduction on the state. Or you can still claim certain expenses even if you're not itemizing at all. And that's what we're going to talk about next. First, medical expenses. Now, as I said before, medical expenses have to be really high for you to claim them on your federal tax return as a deduction. They have to be over 7.5% of your AGI to even start. So you either have to be really, really sick or make a little bit of money. So very rarely do people take medical expenses on their federal tax return. However, in Arizona, medical expenses are 100% deductible. So this is why some people can go standard on federal and they itemize on the state because they're able to claim their medical expenses. So it's very important for you to continue to track your medical expenses and bring that information in with you when you go get your taxes done, because you may be able to deduct those medical expenses on the state tax return. Other ways to save money on medical expenses is the health savings account, or the HSA. Now, HSA contributions will never get lost. They turn into an individual retirement account if you get to a point where you no longer even can contribute to an HSA anymore. So if you can, max it out. Those numbers you see there, the first number is the maximum amount for people under 55, and the second number is those who are over 55. A great example of using a HSA is, let's say you map out your expenses and you spend about $1,000 a year on medical, and your company and your health insurance, because you have to have a high deductible health insurance to even have an HSA, offers the HSA option. And you go to benefits, you say, I'm going to put $1,000 into my HSA. Now, this again is a pre-tax contribution. So you're not paying tax on that money. So you are getting a tax benefit by putting that money into your HSA. And then when you take it out, you don't claim it as an expense because you already got a tax benefit by putting it into the HSA. But sometimes medical emergency happen, and it turns out you have to get a new crown put in. And that crown is going to cost you $1,500. Well, you didn't really plan for that because you put $1,000 in. Most HSAs will allow you to contribute to it after the fact. You can, I'm going to say, write a check. However you get that money into it, doesn't matter. You can write your HSA a check for the $1,500. You then turn around and use your HSA to pay that dentist. You owe that $1,500. If you just pay your dentist directly, you're not going to get a tax benefit from it. Possibly, probably. However, if you put that money into your HSA first, it's an adjustment. So it's going to lower your adjusted gross income, therefore lowering your taxable income, lowering your tax. So you will get a tax benefit from it no matter what, because you put it into your HSA. Another product out there for medical expenses is the Flex Savings Account. Now, Flex Savings accounts have been around a long time. HSAs have probably been around about 15 years probably. Flex Savings accounts have been around even longer. And those are a little bit more tricky because those are a use it or lose it. So you definitely only want to put in enough that you and or your family will take out. Both of these products have the opportunity to buy things over the counter. So just check with your benefits office or with the bank that you go through for these products to see what you can deduct off or what you can use that money for, if not for straight medical expenses. Let's talk about charitable donations. I bet you didn't know that being a member of the Junior League of Phoenix could actually save you money on your tax return. So first, if you're not itemizing on this federal tax return for the 2020 return only, as part of the CARES Act that was passed last March, they are allowing people who donate money and don't itemize to claim up to $300 of cash donations as an adjustment on their tax return. So again, lowering your adjusted gross income, lowering your taxable income, lowering your tax. On the Arizona return, to encourage people to donate to charity, since they increase the standard deduction, they allow us to take 25% of all donations, so money and stuff that you give away, as a deduction on the Arizona tax return. So again, it's very important, and that's whether you itemize or not. So it's really important for you to be tracking your charitable donations because it's going to help you on the state tax return regardless. Now, I'm going to use the word donation, expense, and contribution kind of interchangeably for this next section. They do mean different things, but at the same time, they mean the same thing. So just please understand I'm meaning the same thing as things that you can claim on your tax return. Deductible volunteer expenses. What can you deduct as being a volunteer in the Junior League of Phoenix? Junior League of Phoenix dues. We are a 501c3 organization, and so your dues are deductible. Toastmasters dues, same thing. Toastmasters is a 501c3 organization, so if you're a member of Toastmasters, you can deduct your dues on your tax return. Mileage, to and from meetings, to and from community impact projects, to and from the fairgrounds, whatever you do, just track your mileage because you do get, it's like 13 cents a mile, and you can claim that on, again, on at least your Arizona, if not also your federal tax returns. Some portion of the cost of tickets purchased. Let's say you go to the rummage party, the pre-party, and your ticket is $60 and the fair market value is $20. You can claim the $40 as a donation to the Junior League. Cost of your done in a night contributions. Let's say you are going to donate some items off the Amazon wish list to Harvest Compassion, and you buy $50 worth of items that is sent to them. You can deduct that $50 as a cash donation to them. They are still getting stuff, but that is a $50 expense or contribution to you that you can claim on at least your Arizona return, again, if not on your federal. Sometimes food. It's actually rarely food. For rummage, every year I buy food for the volunteers, for the department chairs and the committee members. I pick up some pizzas, I get water, I bring in some soda, ice. I claim that as an expense, as a volunteer expense, because I am giving that food away to volunteers. So I claim that as an expense. I cannot claim food if I just invite my committee over for dinner. That's not an expense. I can't claim that as a volunteer expense. I'm just being a nice person by serving my committee members some dinner. Any expense that is budgeted in the Junior League budget and therefore reimbursable, and you choose not to get reimbursed, you can claim as a contribution to the Junior League of Phoenix. Let's say, for example, you are doing a lip shift and you rent the U-Haul and you don't get reimbursed. You choose not to get reimbursed, you forget to get reimbursed, whatever happens, however it happens, you don't get reimbursed for that expense. That is now a donation to the Junior League. You can claim it as a contribution, and don't forget to fill out the in-kind donor form that's on Digital Cheetah, because that'll generate a letter showing your donation. So those are all basically money that you give away, stuff you give away. Rummage quota, that is a donation. You can, our quota is $150. It's low, so we can stuff a whole bunch of stuff in an exhibition hall. So I double that number. So $300 is a donation of stuff. And then if anyone gives you items to donate to Rummage, make sure they also get a receipt so they can claim that on their taxes as well for the value of the stuff that they donated. What can't you deduct? Time. Your time is priceless, so please don't ask the government to reimburse you for your time. Don't claim your time as a donation or as an expense on your tax return. Cost of game of chance tickets. You go to the pre-party for Rummage, there's a 50-50 raffle, you put in $20, you don't win. That $20 is not deductible because you had a chance to win. However, exception to every rule, you do win, and you win $700. And according to IRS law, which Junior League, of course, follows, Junior League needs to report that $700 win to the IRS, and you need to claim that $700 on your tax return next year. If you turn around and you donate that $700 back to the Junior League, they don't report it to the IRS because you never accepted it, and it's a $700 donation for you on your taxes next year. Similar with silent auction items. You win a purse. The purse is valued at $100. You buy it, you win it for $50. That $50 is not deductible because you get something for that money. However, on the other side of it, you win it and you win it for $150. You can deduct the $50 after the 100 because the purse is worth 100 and you paid additional $50. That $50 you can claim as a donation to the Junior League. The cost of the items you purchase at Rummage, you cannot deduct that because you're getting something in return for your dollars. And then, as I said before, you cannot claim food or items that you buy for your committee members. It's very much appreciated, but we can't claim that as a deduction on your tax return. How to track your expenses. I use a mileage tracker. It's on my phone. It's called TripLog, TRIPLOG. It runs all the time. I really don't even know it's there, except once a week I get a report and it asks me to designate my mileage, my trips, into categories. So I can go through personal, medical, charitable, whatever it is. And then at the end of the year, when it's time for me to do my taxes, then I just run a report and I have those numbers for me. A deductions or donation folder in your email box. I have one of these. When I make a donation from my credit card and I get an email, I just put that notice into a folder in my email box, so everything's together. And again, when it's time for me to do my taxes, I just go through everything that's in that folder, and I have everything is just all in one place, and I don't have to keep track of 100 little pieces of paper. For medical expenses, I have a specific credit card that I use, so things either come out of my HSA or I put them on this credit card. It's just something I choose to do. If you have that opportunity, it's something you might want to do. You don't have to. I'm just letting you know that's something that I do. Again, so you don't have to keep track of a lot of different little pieces of paper. You can always ask your doctor or your pharmacist at the end of the year to run you an annual report. Let's say you go to the pharmacy to pick up your February prescription. You ask him or her to run your annual report, and they will tell you how much you spent in prescriptions, in this case, for 2020. And then you just bring in that one piece of paper into your tax professional. Your tax professional does not need to see all of your receipts. Quite honestly, we prefer not to see all of your receipts. Please do your homework at home and just bring in a piece of paper with all of your deductions, your medical expenses, your charitable contributions, just on a piece of paper, a couple pieces of paper, but you don't need to bring every single piece of paper in. Arizona tax credits are a dollar for dollar credit to help you reduce the amount that you owe to Arizona. There's 4 different credits. There's the qualified charitable organizations. That's also sometimes known as the working poor credit, foster care organizations, public school, and private school. Each of these have maximum amounts you can contribute based on your filing status, so check with your tax professional before you make any donations. You still owe the money, but if you owe the state, you can donate to one of these organizations instead of paying the state. It might be something, if you owe money still for 2020, you haven't written the state a check yet, it would mean amending your return. So you do need to talk to your tax professional about that, but you might be able to still participate in this, send the money to an organization rather than the state. If you haven't done your taxes yet, just something to think about as you move forward before you complete your state tax return. Now, currently, the deadline for these is April 15th, but the state legislature is discussing extending the deadline to the May 17th deadline, which is the deadline for the tax returns to be completed as a whole. When should I use a tax professional? Always. Well, of course I'm going to say always, but really, I do mean it. A lot of us have jobs that people choose to do on their own when they could hire a professional instead. And why should you hire a tax professional? First is education. Every single year, I need to take 24 hours of continuing ed. This is probably true for all tax professionals, definitely those who work for H&R Block. We're required to take 24 hours of continuing education, and I need 72 hours of education over 3 years to keep my enrolled agent designation with the IRS. I also am continuing to get updates on these new tax law changes, like the tax law change that just passed in March of 2021. There's still pieces of that I'm still trying to understand and trying to get my arms around. So we are always getting the updates on the tax law changes to help you, our tax clients. And the second reason is the experience. I've been doing this for 25 years. I do about 215 tax returns every year. And the reason why you come in, you say, she makes it look so easy, is because I know what I'm doing. I know where the numbers go. I know how the numbers fit together. And so it does look easy because I'm just comfortable with doing this. Some people say, well, I didn't really spend a lot of time there. Is it really worth the money? This is your money we're talking about. I mean, I personally have used box hair color. I've used box hair color in the last 6 months. But I prefer to get my hair done professionally. I spend 3 hours every time I go in there. I go in about 3 times a year. I spend what I spend, and that's just my hair. So again, I just encourage you to think about using a tax professional on your tax return. H&R Block, we stand by my work, we stand by our returns, year-round service, so you get a lot more in addition to just coming in and having your taxes done in the office. What else is coming up this week? I'm going to have some quizzes for you to do based on the information I've given you here today. I'm still kind of working this piece out, so I just look forward to hearing some of your questions. Some things I won't be able to do for you. I'm not doing your tax return for you over Facebook. I won't be able to answer super specific questions, but I will answer general questions based on what we've talked about today and things that will be of interest to the entire group. I want to thank you again for joining me today. I had a great time. You had fun, and I hope you learned something. I had a great time putting it together and being able to speak with you today. This phone number here on the slide, 480-423-0101. That's the office, my H&R Block office. So if you do want help with your taxes this year, again, you do have till May 17th to do your taxes. If you haven't done them yet, you still have some time. If you don't want me to help you with your taxes because you just feel uncomfortable with that, I totally understand. And I can either recommend someone else in my office or recommend someone else in my district, maybe someone who works in an office closer to where you live. I'm certainly happy to help you with that. I look forward to seeing you during this week and then later on in the program to answer your tax questions. Thank you so much.